Right, we're up and running. As you've seen, I had some troubles booting up my computer. It is up and running, so all good. Welcome to the Euro Trade on TopstepTV. My name is Mark Stalker D. I've been trading for 18 years and I specialize in commodities, futures, specifically precious metals and energies markets. If we ever get DAX, I will be trading DAX in the morning. But for now, we're just going to see what moves and then try to eke out a few ticks for this part of the day. Before we begin, Bruno posted the risk disclosure. So everything you see here is for educational purposes only. Do not blindly copy trades and do not trade with money you cannot afford to lose, obviously. And that goes the same for buying combines. So don't go excessively buying combines because that can hurt you. And it's not a very good practice. So focus on one or two accounts, especially if you've not had any success yet when it comes to getting payouts. So keep it an XFA past one day or 1 week. Once you get past that hurdle and sort out your trading gremlins, then you can move forward with your trading skills. All right, I am long crude oil. So if and it's just a combine, again, it is the summertime, so I'm keeping it to sort of one session on my live account and a very, very small risk just to kind of survive the summertime. And in the meantime, I've been messing around with heating oil and just doing a few scalpy trades for this time of the day if opportunities present themselves. But let's look at the very large time frame. I always start with a top-down approach. Now, crude oil on the weekly chart is definitely in a range. We've had this big jump off a cliff a few weeks ago, and then it sort of settled into accumulation. So the reason why I'm long here is a couple of things. One, we reached the previous demand and had a reaction from it, even though last week we kind of pulled back quite significantly, but it was because we actually went all the way to rotate to the other side, and then the market just smashed back down. And now is doing a similar thing from the demand area. So we're going to see if this sustained auction that has just appeared can actually bring us a few tickies, as JD says. So that's the weekly chart. Now on the daily chart, it's about to reach the previous day's high, which is sitting at 66.40. So that is a fairly likely target, especially if I'm hypothesizing that this is a bit of a reversal from this demand that we've just seen on the weekly chart. Again, range very, very obvious. And let's have a look at the intraday time frame. Intraday is opening inside value. Not great for generally for sustained auctions. However, if you're coming from a demand area, there is a pop sort of in one direction and then they sort of settle into some kind of a range, or they even fail the auction to the opposite side. So we'll see whether that is the case here. But for those who like to look at the initial balances and all of that good stuff, the initial balance is actually here. So as you can see, we've broken out of it. While I was messing around with the computer, this was happening. So I am a little bit late here. Not the most perfect entry, because usually when it comes to sustained auctions, I actually like to get in at the close of the 30-minute candle that exits the initial balance. Sometimes if it's a case of a mean reversion back to value, so opening outside of yesterday's activities, a little bit further away, I will actually just enter it either immediately on a break of the initial balance. Sometimes I even have a sell or buy stops, but I only do that if I'm trading on sim accounts or if I'm trading with very, very small size that's not going to have problems executing. If I'm on some larger accounts and I'm looking to execute like a 40 or 50 lot order, sell stops and buy stops just don't work because you get too much slippage. Crude oil is not the thickest of products, thickest of markets. If you look on the dome, It's kind of medium thickness. It's got 25, 10, 30, 37. So that means if you want to run a large order, you really want to have enough liquidity in and around those prices so they can kind of do order matching on the exchange and all of that. So yeah, let's see what happens there. I'm going to tighten up this risk precisely because I am not in with the greatest of entries. Like I said, I'm fully aware that I was messing around with the computer, so it caused me to recognize we're in a sustained auction, but then I kind of just entered wherever it was. And yeah, so let's see what happens. I'm going to just scan through the dome just to make sure that we don't have any massive orders on the opposite side. And when I say massive, it's not like ES where you have like 1,000 lots or 600 lots. Usually it's like 100 to 200. That's considered a pretty decent order. But basically just like looking at supplies and demands or high volume nodes, low volume nodes. Likewise on the dome, you are looking for those sticky outy areas that are an eyesore, very visible to everybody, and those typically get hunted. I'm also going to drag out bookmap on my other computer just to kind of see how things look on the real-time order flow, because you have sustained auctions, failed auction. That's also order flow, right? Because it's the result of the auction that we're seeing at the moment, but then you have this immediate thing happening, right? So we do have a few reasonably strong areas here. And again, what's happened to my visible volume range? Here we go. Let's zoom out a bit. Zoom outy. Right, so a bit of a thicker volume node. My voice went very high up. A bit of a thicker volume node here, but not as thick as this one that we're rejecting. So my take profit is around GEX1. Slight problem is that around 66.25 we do have a gamma wall. So maybe an idea is for this trade that wasn't perfectly executed at all to maybe just have a tiny scalp and then just live with it. All right, now that that's in, let me just do a bit of housekeeping because we do have the new dashboard. I'm kind of, I have access to it, but, you know, I did try to get a combine the other day. However, they were still migrating people to it. So I am looking forward to exploring it, but I am in the UK, right? So they rolled it out for majority of the US people. Those of us mere mortals who live outside of the US, we're kind of late to the party, but it's here, right? They're trying to get it all to migrate everybody onto it. So do stay patient, you know, just like in the markets, we have to stay patient whenever we're changing technologies that will ultimately make everybody's experience better, right? But there's always some growing pains. So I will urge everybody to be nice and to just kind of chill out. You know, you will get your combines, you will get your banked resets and all of that cool stuff, instant payouts, instant deductions, instant XFA activations, like so many things that are improving now. The real-time tracking of your equity as well and all of that good stuff. So, you know, like I said, always some growing pains when we're doing that. And just a little bit of patience is required. But basically, the new platform is here. It is being rolled out for everybody. It's faster, it's smoother, it is designed to be a clean, user-friendly interface that makes finding tools and any kind of key info that you're after pretty simple. The platform is, to me, the whole activation of the XFAs and any kind of past combines. When I first joined Topstep 10 years ago, just to give you like an example of how it used to be. Let me just make sure everything is coming through just fine. Yeah. So just to give you an example, when you would pass a combine, like literally 10 years ago for me, I was their first female funded trader. You would have to wait until the end of the day. Then you would have to shoot off an email. And back then, it would be either like Hogue or MP picking it up, and then they would have to create it for you and give you your login details, which very frequently wouldn't happen until, like, for me, it would be the afternoon the next day. With the new dashboard, as soon as you reach that target, there's no more waiting. So if you want to activate it that day, literally that minute after you passed, you can. That is a huge improvement now. And I'm not gonna say, oh, definitely quote me on this, but I do believe that we are one of the only companies that have instant activations at the moment. But again, don't quote me on it, because I'm not really with too many other firms, obviously, these days. I used to have funded accounts everywhere, because every time somebody would ask me, hey, Dee, what do you think about this firm? So I would go and test it out and then end up with a funded account. So at one point I had something like 40 funded accounts that I wasn't using. That was quite funny. Okay, so we now have the reset bank as a part of the new dashboard. So that means it's one free reset every time your subscription rebuilds. So if you don't use it, that reset will stay banked. Instant activation, we talked about that. Payout tracker, for those of you who are in the XFAs and are doing well, you can monitor and track your payout requests all in one place with real-time updates, so that you know the status of your payout. How cool is that? So rather than going on Twitter and going, where's my payout? What is happening? Now you will have a pretty clear idea of where that payout is and what's happening. Payout amounts are now deducted from the balances instantly, which was not the case before. Before you would put in a payout request. You've seen me do it a few times on air during the live broadcast, and then they would kind of have a look at it, and then at some point it would get deducted from the account. Then you would have to wait until that's deducted, and sometimes it would take 3 to 5 days. All of that is now massively improved and streamlined, so it's a very, very awesome addition to the Topstep services. You can now also have your certificates and payout statuses in the new dashboard as well. So yeah, that's it. Housekeeping done. So hope you like the new dashboard. I know some people have had some problems with it, but like I said, don't freak out. There's always a little bit of trouble. Let's have a look at who's doing the chat. I'm apparently a part of Topstep's furniture. Wouldn't mind living on MP's sofa for a while. What's wrong with that? I mean, being affiliated with the first company that started the industry. Yeah, let's not forget that everybody else, initially, they were copying whatever Topstep was doing, the first couple of firms that came after. Now it is an industry, but we're still the pioneers. So I think it's something to consider. I've also been affiliated with Topstep in some shape or form for over 10 years. So it made sense that I will be a part of this. And I'm at this point, after I got funded in 2015, so let's not forget, I was the first female trader to get funded. That's how I met everybody. They invited me to be on their Squawk radio back then, just in case you didn't know that. And then I got eventually through Hogue being my risk manager at the time, because he was actually doing the job that Mick was doing for us last year. That was something that brought us closer, and we developed a great friendship. Then I got to know Eddie through the interviews, and then we started chatting. Then I got to know Hoop, and I got to know everybody. And 10 years later, we came up with TopstepTV. So they were like, hey, Dee, you want to be a part of it? So yes, I am part of Topstep's furniture, and proud of it, man. So if you think that you're somehow trolling me or whatever, I'm going to say, yeah, I love Topstep. That's why I'm here, man. Snipo says, good morning, coach, looking sharp today. Glad to hear that. Because last night I actually had a bit of a problem with one of my smaller dogs. In fact, the smallest dog, jumping into my face as we were coming back from the walk. And so my lower lip, unless you can really can't tell, you probably can't tell on camera that much, but this side of my lip is actually super swollen. I've got a massive cut inside it. So it wasn't his fault. It was nobody's fault, really, just a bit of mistiming. He had a ball in his mouth, loves his balls. And I bent down thinking he's not going to be jumping into the car. And I bent down to kind of get the ball from him, but then he just spewed the ball out and jumped straight into my face. So that was not very pleasant, but hey ho. All right, let's just get out of this, and maybe I'll get a better entry because this is a little bit far from the initial balance. There's no need to stay too long on the wrongly executed things that are not going your way. So yeah, a couple of ticks there. Let's just see if we can get it back down to the initial balance, and then we're going to see how the price reacts there. Could be a failed auction because it's an inside day. Could be a bounce from the initial balance. So I have a couple of hypos there. Wouldn't necessarily advise people to have like either or setups from the initial balance high. I would take context into consideration if you're newer, but if you've been trading for 5 years, 7 years, 10 years, 12 years, 15, 20 years, having those line in the sand moments, provided that you don't lose the plot. Let's keep it like a little bit less potty mouth here. Provided that you don't lose the plot by flipping and flopping and flipping and flopping and then digging holes for yourself, it can actually be a decent way to look at things. So one of the other reasons why I exited, like I said, we have a gamma ball at 66.25, so it wasn't going to be the biggest trade anyway, and it is August, so I'm just being kind of extra careful not to stay in trades for too long if there's no need for that, especially if I've bolted up on the execution like I did today because of the computer malfunction. Tom is asking me, hi Deeyana, can you talk a little bit about your ADR strategy today? Yes, so last night, if you're watching the main broadcast, I sniped a little natural gas trade that, like I said on the broadcast, didn't really make a proper move until the last 2 minutes of settlement for NYMEX. Yeah, let's have a look at that now that I'm out of this. So, yesterday, ballpark ADR high was on natural gas around 304.3. Now, just like anything, it's not like to the tick, it must be there. It's a zone, right? So it's a zone of usually about 30 to 40 ticks on natural gas. Sometimes they reach it, sometimes they overshoot it, sometimes they get right up to it and then kind of shy away from it. That was the case yesterday. And time of day is a huge component in the ADR strategies that I kind of twisted and coined and made it my own and started using it as a level. I have never seen anybody up until that point use it as a level. To me, it came as a bit of a enlightened sort of moment where I was looking for ways to time my swing trades better at the time. And I noticed that my product at the time, which was Forex, this was like 17, 18 years ago now, very long time ago, that it would move a particular number of ticks per day. So I was like, okay, today we moved 150, then we moved 140, then we moved 160, then another day 155. So I thought to myself, what if I could quantify this? And what if that becomes my exhaustion of the range for the day? So I started looking for a measure that would do that. And the only thing that I found was the average daily range or average true range. Now, them two are different in the calculations. ADR is only taking in the true price action with no gaps. Like, let's say we have a weekend, and then after the weekend you get a gap. Well, a TR calculation will take in the gap as the range exhaustion, whereas a DR won't. It will start its calculation when the market actually opens, whether it's a gap or not, but it doesn't take in gaps. Now, for most of you, you would have seen Coach Paul at the buzzer talk about the measure for scaling your stops to the volatility of the product by taking a 5-minute chart and using 2 ATRs measure over the like 14 periods, I think he uses, which is like the core number of days that are being used in the measure. I use it in a different way. So I use the ADR and then my own twist on it, ASR, which stands for average session range. And I use it as a level. So I will look at the previous 10 to 40 days, depending on whether we had outlier days or not, to just look at it as a dynamic measure, almost kind of like a volatility band, but based on the ADR or ASR. Now, ASR is particularly useful for London because I measure it just up to the next start of the next relevant exchange. So let's say for natural gas, that would be my 2 p.m. I wouldn't mix and match. So I wouldn't use the ASR for London. That includes the other sort of 2-3 hours of London when we overlap, because that's different players, it's different goals, and therefore it will skew the data. Now, mind you, I am a mechanical trading systems creator as well, so that is one of my expertise. On prop, I don't really do that. I just basically do my manual trading. I think it's more fun, and obviously, it wouldn't make it for a very fun activity if I just sit there and just go, I switched on this algo. And then I switch it off. And then I go, now I'm going to switch on this one. So obviously people want to see people click buttons, trade, and all that. But for the most part, ADR reversals towards the end of the session is actually one of the major strategies that I have. And actually, the fade into settlement, it made my career. So it wasn't really London trading. For a long, long time, I only traded the New York session. And it wasn't really up until about 7 or 8 years ago that I started looking at DAX. And I even looked at Bund. I didn't really like Bund, but the prop firm that I was at the time, they were doing DAX, Bund Bubbler shots, and, a whole bunch of Eurex specific products, and that's where I learned that DAX is actually really nice for London, so I started trading that. But I still keep my main trading activities where I do like 5 or 6 trades on multiple products, usually commodities and precious metals, towards the end of the day, right? So I would classify myself more of a later session trader. I do not enjoy trading the initial balances nearly anywhere unless it's like a Frankie fake out on DAX or something. Then I will snipe like a little reversal if the market is giving me a chance to. But for the ADR and ASR, it's basically looking at the quantitative extreme, the exhaustion of the range for the day. So if you can, like, let's say you're looking at a breakout. Let's take a crude oil. Like this one was the end of day, classic natural gas, fade into the end of the day, touches the ADR zone, and then creates, it was a little bit dramatic, it kind of flushed out, then pulled back, and then literally as we got closer to the settlement in the last half an hour of NYMEX, they just smacked it down. So I did take that. I entered it while I was on lunchbox trading with Eloisa yesterday and with JD. And then I just held it into settlement. That was the trade, right? So nothing too complicated. It's effectively somewhat of a reversion strategy. It's not like a gap fill or something, because those are very, very violent. ADR reversals are kind of like your regular reversals intraday, where the market just gets up to a certain point. It's pretty late in the day, and naturally it runs out of some volume. So, which then leads to take profit moves into the end of the day, and then you get that nice sort of rollover. They're not swing points, though. They can be swing starting points if you are at a good area on the daily chart, then you see that, and then you're expecting Asia to continue it. But there has to be like a really, really good chart location on the daily or one of the larger time frames in order to justify holding that trade past past its own designated sort of settlement time. Now today we are seeing the reversal continue that we started yesterday in natural gas. Natural gas does have a downward direction, downward bias. And as you can see, this is all just pretty steep. It just continues to fall down, down, and down. So naturally, when we got up to the ADR exhaustion, it really made sense to go lower, right? So hopefully that clarifies it a little bit. But just know that ADR definitely works better towards the later part of the session. It's not really something for the open. It is a strategy where you would be looking to fade the day's move. A couple of pointers there as well. If you have some mad trending day with multiple sets of single prints, it's a zombie rally on equities, don't go, oh, it's ADR high, let me short it, because there are so many people that were doing that. You have to take context into consideration. So for example, I would think twice whether I'm going to go long on natural gas when the higher time frames are looking like this. Okay. If this changes and if we get a consolidation, accumulation, phase one, as I like to call it, and then it kind of pulls away from that area, and then the next day or the next day it pulls back to that area, yeah, I might take a long on natural gas on the basis of ADR low exhaustion. I might. But the context on the larger time frames really has to be correct. So many people are staring at like 1 minute chart, 15-second chart. I have someone who's a pretty sophisticated investor in my VIP, and he's a pilot. You know, he obviously has a lot of a lot of skills that are very good for trading, like staying cool under pressure. His brain processing power is very, very good. And he was explaining his strategy and then telling people like, oh yeah, and then I enter off of a 15-second chart. And I was like, dude, please, and Joe, if you're in here, please don't tell people to trade from 15-second charts. I know that it works for you. I know that, you need to know that you are not your standard person going into the trading activity. You have some skills that are vastly superior to most people out there, right? And same goes if you're a musician, highly skilled musician, if you can shred guitar, if you're an amazing pianist that has Prokofiev under your fingertips, like it's nothing. We generally have higher brains processing power, right? Because we've trained for it. Some of us are maybe born with it, but I know that I had to work on mine when I was a kid. However, after playing instruments to a very high level, on very high tempos, you get to a point where your brain starts to experience very quick events, almost in slow motion, once you've trained for it. But most people would not have trained for it, so they don't have it. And we have to recognize that. So as a coach, I'm very, very mindful not to tell people, yeah, just do what Joe does. It'll work for you. It won't. You need to be slowed down, not going down to lower and lower time frames. You need higher time frames, more time to think, giving yourself time to process the information that is assaulting you at the speed of light, especially if you're trading NQ. And that's something that can mess with your emotions. So never mind the strategies, start with a higher time frame, analyze it all the way down to 15 minutes. Try to keep all of your, levels the same. For example, for me, it will always be value areas, quantitative extremes. So ADR, ASR. And yes, there are times when the market exceeds those, but that is also data, right? For me, if something exceeds the ADR very early on, I'm always like, is this a rally that's going to last all day? Let's see if we can get a pullback and then get in on that rather than going against it, right? So it's all data. I'm sorry if I'm talking weird. My lip is hurting. I actually, like I said, I have a cut on the inside. And as I'm talking, it's just yeah, it's getting a little bit worse, but we'll live through it. We'll be all right. But yeah. So hopefully the ADR ASR is a little bit clearer now. I am thinking of creating a long form YouTube video, not like long form. I'm not going to be harping at you for like, 40 minutes to explain the ADR, but just like maybe like 6 to 10 minute explanation of what they are, how I use them, and how you can start using them as well. We do have our indicators on what is now quickly becoming a bit of an outdated platform, but we do have indicators that automate this process for you. I know that many people like to see it on other platforms. We are working on them, so we're working on bringing it into some other I would love to bring it into Topstep X if there ever is a choice to do that, of course, but until that time, maybe, just maybe, we might do some kind of a Discord service. And I've gotten more familiar with Discord. I still think it's a little bit cancerous with all the like real-time chatting and stuff, but because I've used it now for like 3-4 months, it's workable. Not my favorite, but we're thinking of maybe making some kind of a bot that might spew out our levels from the existing indicator into the Discord. And I'm talking to my developers to see if we can kind of make that available at some point, because it seems to be a very highly requested feature, and it's a useful feature, knowing your swing extremes intraday, which is what ADR and ASR do. So yeah, we'll explore that side of things when time comes. But yeah, let's scan through the markets here. Just looking at whether something's catching my eye. And one final point on ADR and ASR, like anything, is just a level. So it's not like, oh, this I go short here. No, you have to wait for the price action to show you the way. I was also on a short gold yesterday when that drop happened, when the news hit. That was from an average session range high for the COMEX session. They got overshot. And then they overshot it. Eventually, they showed up on Bookmap that they're rolling over. So I jumped on it, stayed in it, and then news came in and just pushed it in the right direction. So I was like, oh, that's nice. So I think I grabbed 83 ticks out of that. So they are they're pretty good, good little setups. And even though they're quick, they are pretty sizable. They're not like, oh, you're going to get 5 ticks off the ADR. No, we're talking like, on average, about 30 ticks. But if it's a more liquid product, then you can actually grab anywhere from 70 to 100 ticks on those reversals, because what you're doing is effectively getting to the end of the day's range. So you at least have about 30% of the range on the opposite side to take a profit. Even if it doesn't roll over all the way, it's a partial take profit reversal, if that makes sense. Joe, I know what you're trying to say. Absolutely. So Joe is in the chat. I know what you're trying to say, but just know from my experience coaching people, the only thing they will see is the 15 seconds. Okay. They will just completely, not take in about how you look at the higher time frames and how you have sophisticated playbooks around it. No, all they will see is, well, Joe executes from 15 seconds and it works for him, so therefore I'm going to do that too. So yeah. Brian says, I hate Discord. I was of the same sort of sentiment, so, to put it that way. And that's why I never went down the route of Discord. But it's like everybody's using it. And, we got pushed into it for the VIP coaching season 2. And yeah, like I said, still cancerous, still annoying. But especially with random chats. Like, I don't mind the VIP because obviously we have streamlined trading ideas. We're discussing, what is happening. You enter some of the other groups and it's like, oh no. And then you post something and you get ripped to shreds. I remember the first time when they told us, yeah, you really need to be on Discord. You're going to have your, like Bruno, the chat moderator, we talked on Discord as well. So I was like, okay, let's see what's in the server. And I literally posted, I didn't even post anything to say, yeah, this is the setup or whatever. No, I just kind of said hi. And I don't know, maybe I said something. No, I don't think it was anything like super inflammatory either. I think I just said, hey, how's it going? Blah, blah, blah. Or somebody asked a question about crude oil, and I said, crude oil got into a bit of a funk last year. So yeah, I might explore some other products, have a look at RBOB. And suddenly I had like trolls all over me who ripped me to shreds for no reason whatsoever. Oh yeah, your hair looks stupid. Oh yeah, I mean blah. You wear too much makeup, or you don't wear enough. And I was like, is it all about my looks now? Like what? I thought this was a trading channel. What is going on? But yeah, it just goes with the territory. However, Discord in its own right, much like Twix, Twitter and X, a little bit toxic at times. A little bit toxic. Yeah, lots of toxicity in financial discourse, that's right. But I've got pretty thick skin and a good moisturizer, so it's all good. Yeah, bash away, man. I don't care. Braz JL says, hi D, quick update on my XFA. I'm 104 days in. Oh my god, that's absolutely amazing. Absolutely amazing. It's going pretty slow though. I just started trading with 3 micros. Hey, slow is good. Fast and furious and then boom and bust. That's not good. Don't rush. It's amazing. You've kept it for 3 months. That's some kind of a record in this line of work, and keep it up. Just keep it slow. Look at it as an account that is an asset, and respect it, cuddle it, wine it and dine it, be gentle with it. It's amazing, right? That's what we like to hear. Whenever people come in here and they go, I passed my XFA, and then the next day they go, I lost it. I'm just like, no, please no. But yeah, it looks like for some of you who have been turning up here and spending time with me, which I thank you for, by the way, I really appreciate everybody in here. You get results where you're able to keep the accounts, and yeah, it might be slow, especially during the summertime. Yeah, we had a weird July. We're having a bit of an odd August, but it seems to be slightly better than last year. I think August, last couple of weeks, on my products at the very least, they kind of went completely dead. Copper is still very quiet, so I'm kind of staying away from it for now. I mean, I still look for setups. It's still on my radar. I'm just not going to be, smashing in 2 to 3 copper trades per day like I normally do at other times of the year. So I've actually, one of the reasons why I'm doing this combine, I've started looking at heating oil. Like, interestingly, it's a very thin market. Even during the regular trading hours, it looks like this, right? So if you're going to trade it in the live account, I don't know how that's going to work, because maybe a lot of slippage, primarily because there's just not too many people trading it. However, I'm finding it really smooth. I don't know what is it with me and thin markets, but yesterday I did a pretty decent short. Let me see if I can find. It was a pullback into the initial balance and then a continuation. It was this one, this drop here. Now, if I remember correctly, yesterday, obviously VWAP kind of moves throughout the day, but yesterday we were hitting VWAP here. So we had the initial balance extension, and then a pullback, and then a rejection from the initial balance low. And that worked out perfectly. So I was like, that's very smooth. And I've been watching it now probably for about a couple of months without trading it, just kind of with all of my my indicators and tools, not indicators, because they're not like, oh, buy here, sell here. They're just like tools, and they'll lens into the market. And yeah, it's, I don't know, maybe, I mean, it's right up my alley, right? It's an energy product. So we'll see. We'll see. Maybe I'll have a heating oil trade at some point. Someday. Oh, with the rainbow. That's the wrong lyric, isn't it? Somewhere over the rainbow, not someday. But hey, bit of, artistic freedom and all that. All right. Anything else? I'm just scanning. So gold, kind of establishing a range on a 15-minute chart, which it usually does in and around about this time of day. Platinum also seems to have settled. Let's see if we've got any interesting levels in platinum here. Crude oil, I'm still waiting for it to either test the initial bounce high or to fail the auction altogether or to rise up to the average session range high, which is not until we get to 66.50 to 70 range. But that might not happen until much, much later on. Where's NYMEX? If we open above value for NYMEX, because it is higher, it is lower than the London one, there could be a mean reversion down to 65.60, 65.50, because obviously that's options related as well. So I don't like doing weird numbers. Yeah, 65.50 is a reversal and maybe a bounce from a value high. Don't like being long crude. So if I do anything with it, it's probably going to be some kind of a long option for a few days. Because I don't want to mess around with the stop, and I just want like limited risk, capture the move without too much time decay and be out of it. So yeah, that's where I am with crude oil right now. But we'll see. For the long options, you really need to be in on the day when just before it goes nuts, so that you get that kind of delta sort of working in your favor a little bit, and then you can get a positive risk reward on the option. But otherwise, you don't want to keep them to expiry. That's just crazy. And by the way, guys, we have Paul H in the chat. He will be here with us tomorrow. So he'll be joining me to have a chat to see how things are going, catch up on things. And he's always very good to discuss what sort of trading setups he had. But also he's a very good laugh. And I'm really, really looking forward to having Paul here tomorrow. So it's not going to be just me, lonely. Yeah. I've got all of you, so it's not lonely, right? It's very, very lively. Yeah, she said, they didn't even give you a chance to talk about Discord. No, nothing. Literally one thing, and then whoosh. I felt like I entered the Discord. It's like I stepped on the stage and somebody just threw like bottles at me. That's how it felt going into Discord for the first time. So not the best experience, I don't know what it is with people wanting to be mean to others that they don't like. I was on the VIP draft last week when we were like announcing who's going to be in whose group, and we had Joe Black, and he was like just really ripping into me. I don't know, like, what's your problem? And it's like, yes, you need a new. And then another guy, they kind of went off on one, saying you need a hairdresser. It's like, dude, I don't leave the house. It's like I'm not going to go to I hate hairdressers at the best of times because they always want to cut my hair, and my hair is always frizzy and frazzled because I straighten it because I have kind of wavy curly hair naturally, and I hate it because I look like a cave woman. And then I also bleach it because I got gray. You can probably see parts of it coming through here because I kind of lapsed on my root dyeing. But I am pretty salt and pepper, guys. Like I'm not like, I know that my face looks young, but the rest of me is absolutely falling apart. The face is good though. It's fine. But yeah, and so they ripped into me. It's like, oh yeah, you need a new hairdresser. Yeah, better buy a better mic. Like, this is a $700 mic. It's it's a pretty high end one. But my voice generally is not the strongest for the speaking, and I also have this kind of strange mid to boomy section. And yet it's not the deepest of voices. I actually have a very high singing voice. So that kind of creates some weird frequencies. And when I got this new computer, I completely forgot to do all of my EQ and stuff on the microphone. And they actually reminded me when they started going, oh, you need a better mic. And I was like, oh, actually, yeah, I didn't do the EQ. So that's what I think about. But yeah, people are just unnecessarily toxic in this industry. However, if you think that you have anything on the toxicity that goes on in the music industry, you gotta you got to think twice, because it's however the financial industry might be toxic, music industry is worse. Okay, much worse. They are ageist, they are all up their own, whatever. And I've seen egos from musicians that have achieved nothing in life, but just because they have some talent, they think they're like better than everybody else. Now, I have a lot of talent, but I've also achieved success as a musician, so that irks them, because they're like, oh, but you sold out. And I was like, yeah, for money. Which is what you should be doing if you're a professional musician. If you're an amateur, yeah, sure, play for your soul, man. But I like to eat and live in nice places, so take that. Yeah, so I have no problem calling out people. I'm never going for low blows. They go for my looks. I don't know why my looks and my hair irks people so much, but I will never say, oh yeah, you look terrible, because I don't know what they look like, and I also never going to be mean for them, at them, but I will maybe ask them whether they had their meds today. That's as low blow as I go. It's like, something's up with you, man. Did you take your meds? And then I had somebody who went, oh yeah, did you take yours, Dee? And I was like, yeah, I took all of my meds like a good girl. Have you? And then they just couldn't find anything new to come up with, so they just kept repeating my jokes, and I'm like, find your own joke, man. Like, what the hell? Find your own comeback. But yeah, copycats. So not seeing anything super obvious. As I'm talking, I am trying to multitask and scan, but yeah, nothing juicy. Everything kind of partial, where like, might be a scalp on YM down to value. Oh, crude oil might be finally failing that auction, man. Is it at a level of interest, though? That's the question. So Gamma Wall was touched at 66.25. Let's have a look at it where everybody can see that. So 30-minute chart. Here we go, bit of a failure of the auction. Let me start staring at Bookmap, because I've noticed when I'm doing streams, I tend to not be super attentive to everything that I normally look for. Let's try, whoops, no, that's the wrong product. Okay, yes, you see what I mean? And this one is going to be 35 ticks, because I'm not going to be as attentive again as I normally am. But yeah, let's see if we can get down to initial balance, maybe fail the auction, rotate back down. Because in and around this time of day, super sustained auctions, they just gotta keep going. A little bit rarer. And because we're opening inside value, it's actually dipping back inside values. So that could be, so let me put down the value for you guys. It's 66.07. Just gonna do a bit of 607, change that to purple, light purple, because I can't see squat. This is London related values. The COMEX values are lower down, but we're doing London now, so. And then value low is 65.40. So what's happening here now, if we manage to sustain this reversal and actually fail the auction, which should happen if we go below 66, and then also accept the initial balance back down to 65.90 and sub 65.90, it's basically, when they do this is a responsive activity trade. Responsive meaning market-making activities. So basically they get up to a gamma wall, which by the way was at 66.25. So there it is. This is core resistance from end of day at 0 DTs. These are 0 DT levels. So the degens playing 0 date to expiry options. And when you exit the value and then the market makers sort of come in and make a significant enough move that sustains. So right now I'm just ballpark guessing, educated guess on what could happen here. And then you start seeing them initiating positions in and around the gamma wall. Usually if I'm not talking, not doing production, not looking at chat and, trying to keep track of a million things, I will try to watch bookmap in and around these levels and get as close as possible as I can. Obviously, again, theme of the day today, D late into setups by about 20 ticks because she's dicking around with other things like a computer that won't boot up and other things. Anyway, so usually I would try to get in within the 5 to 10 ticks of my orientation point. If I don't, then I will typically either increase the stop loss, lower the size, and just try to get a few ticks out of it. But I wouldn't necessarily aim for 1.5, 2R, 3R. My default is 2R multiples. But if the day doesn't offer me that, I will stick to 1.2, 1.3, just to get it over that hump of 1 to 1. And then just move on to the next day trading time zone, next time frame. I don't trade too many trades. In fact, if I do 13 trades in a day, I'm like, whoa, that's a lot. So I'm not somebody who's going to be smashing. I'm pretty selective with the types of trades, but when we are in range-bound markets, I will trade more because I will, try to scalp a few ticks up to the nearest area. Like, for example, that first one did bank on reaching 66.25. But then I was so late into it that it was only like a few ticks out and then it started wiggling around. So let's see if we can get the responsive activity sell off to the opposite side. And for now, the first point of reversal, potential bounce, that is a danger zone, is the initial bounce high at 65.91. So we'll see what happens there. My stop loss is above this whole situation. So if the sustained auction continues, we would really need to break the gamma wall at 25 with some confidence, and that would invalidate this whole setup. So the wider stop is still within within the statistical range of and probabilities of reaching 1.5 to 2R intraday during London. And it's not super tiny that it's going to take me out of a move while I'm talking and doing other things, right? But it offers me time to give this little potential setup that I'm looking at to develop over the next sort of 2 hours or so. It's not going to be a quick trade unless we get some news because this is not exactly the best time of day to be trading crude oil, but we don't have DAX. And out of all of the things that I'm looking, so crude oil is the only one sitting around gamma wall. Yeah, literally, I'm just scanning through. Platinum is sitting around GEX4. It's like that level. You can go up, you can go down. I have no idea. But and also consolidated massively. So yeah, this one, levels wise, not that I'm a super fan of trading range bound, like I said in Discord yesterday, as if range days are not annoying enough. I love my intraday swings because you can just get in on a swing and just go do other things, and you come back and you've made 300 ticks, and it's like, whoa. But they don't appear every day, right? You have to be very selective when you're going in. Braz JL, I see you've got another question. Going to slowly scale up like I'm doing any psychology tips or any tips in general. Have some sort of an idea of percentage versus your overall risk model. So what's working right now for you? It's slow, but it's working, right? You're profitable. What percentage of the overall account balance are you using per trade? What daily loss limit do you have, if any? Because if you're doing well, at some point they will move you into the live account, which comes with its own kind of set of problems, because they will put you on a data loss limit. And frankly, even I struggle with that, because I kind of got used to just working with whatever balance I have, and then I got back into the live and I'm like, oh yes, forgot I had a 3K limit there. And then I tried to size up, and I just kept hitting into the data loss limit. So then I reduced everything. Summer came, and I'm like, I'm just going to chill the F out on the live. And literally, I'm just going through my process now, just trading one micro. That's all I'm doing. I'm just like, I want to see how far I can push it on one micro and not get annoyed with myself. Because I do get annoyed if I look at the P&L, but I'm just literally trying to get the process down to a T. I have the products that I trade for certain parts of the day. I'm not going over the 5 trades per day, maybe 6 if I'm like scaling in or out, so that will show up in the platform. And I'm replicating nearly all of the afternoon trades on this combine. So whatever you see on here that I show in analytics and stuff, that is being carried over just for the afternoon. Usually I do 1 or 2 trades for London, but those are not on the live because I don't have good probabilities on these products for this time of day. My time of day for CME products that we currently have on Topstep is by far the part of day between 9 a.m. Central, which is 3 p.m. London time, all the way into the Euro close, and then a little bit after, so into kind of that New York lunchtime. And then not lunchtime for New York, but chilling out for lunchtime, and then coming back for that settlement play that made my career. So I'm trying to like be super, super disciplined there. And I've removed the size from the equation because, okay, here they are. I'm seeing them. There it is. Failed auction. Failed auction. Are we going to fail the auction, or are we going to bounce from my initial bounce high? That is the real question. What's going to happen? Who's going to get there first? I try to do that as if you're at a game, game. It's gunning for the initial bounce high now. Stalling a little bit around the single print. The single print fade is in force. Are they going to sustain it below 66? Or is it going to come back up? How'd you like that? A commentary on price as if it's a football game. Or maybe it should be more like a cricket game. Have you ever watched a cricket game? Because I don't get it. I'm not English natively. I'm a naturalized British citizen, but I'm married to an English guy. We've actually, in 2 days' time, it is officially going to be our 10 years of marriage, but we've actually been together for 20 years. We actually got married for our 10-year anniversary. And he loves cricket. And sometimes I'm kind of listening in the background because he puts it on Sky. And they sometimes, I think even the commentators get so bored. They go, there's a pigeon on the cricket ground. And I'm like, did he just say there's a pigeon on the cricket ground? What? So sometimes maybe London, because it does get a bit boring, maybe it can be like, there's an order, singular order, at 29, at the 6608, but they've disappeared now. They've walked off, never to be seen, into the sunset. Yeah. Katarzyna says, last time you mentioned to check YM instead of NQ. And that you're converting ES options for YM. How do you make the conversion to wake YM option levels? Okay, here's the thing. So Mentor Q actually has another indicator called blind spots. And that's something you can use instead for YM. So just to finish up the observations here, the single prints are actually being a little bit bouncy now. So I still need to wait for the next at least 15-minute time frame to finish, because the bounces could be non-sustained and it could just come back down. And the context of all of this is happening right on the nose of value high. And it's an inside day. So it's like, it's still not rejecting value. I still can't do anything about this. So I need to wait for a larger time frame to actually show me the way. But they kind of tried shaking it out. Now they're back up. Could be passive buying, but I don't want to be in on longs just yet. If I'm in on longs, I would rather see it actually hit initial bounce high and then reverse. Just single prints during during London, they usually get taken probabilistically, so let's wait. Yeah, so the YM options levels. YM doesn't have any options, but the blind spots, what they do, they kind of aggregate all of the correlated products. And then they weigh the blind spot 1, 2, 3, just like you had GEX 1, 2, 3 to 10. But it's not an outright calculation for YM. It kind of works, but I've also had success just by converting straightforward ES levels, and they have that conversion. I might try doing that for you here now. Well, let me just update the levels. That might help, because I haven't looked at YM this morning much. Pi says, what balance is needed to trade 100 lots with Topstep live? Okay. I've had account sizes that were 2 million. I was trading mostly 40 to 80 lots on that. Like, it's scary stuff, okay? When I was with a prop firm that was pushing size, I got up to like, what was my biggest? I think my biggest ever position that I can remember was 180 lots in gold. And that was a pain to enter. If you think you can just click a button and it's going to execute a 100 lot order. Unless it's like Black Swan event, or you really pick your liquidity pools where there's a lot of people on the other side and you maybe want to front run them. Like, let's say you've got a seller up here that is like 500 contracts or 1,000 contracts. And you're like, well, I'm going to get up there and then I'm going to swipe some of those contracts as a liquidity. That's when you become really the sort of almost like a half market maker, right? You're not delta neutral because you're looking for profits, so you're not a market maker, because market makers don't look for profits like that. They look to stay market neutral whilst they're still taking the bid and ask sort of few ticks here and there to make money for themselves as well. But most of you want to get a little bit more out of it, and some of you look for swings, which means you're speculators, you're not market makers, and you're not neutral. You have a direction in mind. If you have a direction in mind and you keep anything past like a few seconds, you're just not a market maker. These days market making activities are mostly done by HFTs, and that's why you just can't fight them. Yeah. Where was I? Hold on. What was I doing? I was answering somebody's questions. Oh yeah, YM levels. So I've had success. I've updated that now. So let me drag that over, since we are talking. Like, we want to stay focused on Topstep X, but sometimes I do get questions from people, and we've got to show them. And until we get third-party indicators on Topstep, we have to quickly show the other tools. So this is the blind spots, right? But if you go into end of day indicator on mental Q, and then you go into the actual indicator, and I'm just going to make it a little bit prettier because usually they have these enormous labels. So those are the first two things. If you want to convert it from ES into YM, you do have to do this, right? So this is the levels conversion settings. But don't use this on its own. It's not quite enough to go, oh yeah, I'm just going to have ES levels, and they're just there. So what I like to do, I actually like to have my this is what my equities options indicator looks like. So I have DAX, I have ES, I have YM, and I have NQ. And I keep a look on all of them at the same time. And then these levels, how they are reacting, they can tell me what's going on. So if I now get rid of this, you will see that the blind spots are kind of in the areas where major areas are. So here's the put support area, but I would not just be looking at YM and just trade YM. I always have all of them, and I can do that because I've actually done coding for this co-integration bot that we had running from 2015 to 2017, and then the carry trade kind of just broke down, and that broke down too. So I am very familiar with like things like triangulations in case of three things that correlate. So let's say you have something like a crack spread. You have crude oil, RBOB, and heating oil, right? And they are very connected instruments. There's a triangulation between them. So sometimes running some co-integration, it's like a correlation, but not quite. And you know, you can find some really nice divergence and convergence plays. A little bit too complex to explain all in like just one session, but just know that there is a relationship between all of these that is somewhat fluid, sometimes very fluid, but sometimes you get these really big divergences that are just staring you in the face and you have to take them. But on the arbitrage level, they're all taken really quickly. But some of the other products, like let's say you see a divergence between ES and NQ, usually one of them is going to catch up at some point. And YM and ES can also be going completely different directions, and then at some point they come back to convergence, and you see some really nice setups out of that. So don't use these all on their own, but you can see that they're kind of similar. So that's what they're looking for. They're looking to convert the options levels that are sort of correlated products, and then they sort of put all of that into a blind spot effectively. But for me, I like to look at both and then just see how, for example, ES is moving, how YM is moving, and also how our friend DAX is moving. So hopefully that helps you. YM is sitting at VWAP and value high. So let's see if we can maybe, because it's a combine, right? So, and it's London, so it's London. While I wait for the next few minutes to finish here on crude oil. So look at what they do at VWAP and value high on YM. And I'm also going to switch on. All of my bookmap products decided to shut down when my computer malfunctioned. That was weird. The Trader X 50k account. What size would you recommend for MES? Doesn't matter what you're trading for. A 50k account, just start with 2 micros. If you survive that and you manage to hold on to the accounts, then go up to 3. But look, sizing depends on your level of experience and level of discipline. If you're somebody who can stay disciplined and you are somebody who doesn't grasshopper and has very well defined playbooks, you can trade with size. You can trade like 1 mini. If you find that you are somebody who's very advanced, why would you mess around with micros, right? If you have confidence in your strategy, if you're at the time of the year when your strategy is absolutely smashing and you're not in a drawdown currently, then, you know, you can pass these things in like theoretically, 3-4 trades, sometimes even 2 trades. If you find a swing one day, find a swing another day. Like that, I've done that before. Just find a swing, go in with like 3 lots, and get like you know, 200, sometimes even 300-400 ticks. It's happened on copper, it's happened on platinum, and I've done those in my live as well. So it depends. If you are grasshoppery, if you are trying to be a scalper, but you're bang, 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 that probably is not the best for size. So size down to give yourself enough swings at the bat. The more you trade, especially if you don't have proof of concept, but you still want to smash in 50 trades a day, just do one micro. Just one micro. Because, you know, if you're doing that many trading, that many trades, that many trading, that's not English. If you're doing that many trades, you really need to make sure to leave room for mistakes, and you're probably not going to be skating in and out if you're just holding trades for a few seconds. So you just probably hit and run, hit and run. Not the best way to trade, by the way, those sorts of systems, unless you have a very good sample size, unless you have a very well-tested system. And how did Short Life Hacks put it? 10,000 trades over a year to test your edge as a scalper. Then just try to be more selective, you know. So are you selective? How many trades per day do you do? But generally, if the whole combines are a new thing for you, just start with small size, go from there. With the new dashboard, you've seen that they are now limiting the resets, so you can only do 2 resets per day on the same account. I think you can only buy 10 combines per month. Otherwise, you will get flagged as somebody who's churning and burning. You do not want that. So, yeah. Paul H., how do you measure confidence? Is it price, volume, or both? It's basically, in the simplest terms, like what I want to see. Confidence is when you have a shakeout like we've seen on crude oil, and then it kind of stays into one of the higher time frames. There's almost a Maribozu, so no discernible wicks either side, or at least to the side that it fell to. Whenever you get these like sell-offs, then a pullback, that means somebody is buying it, right? So I call that passive buyers that are just kind of sitting there waiting for pullbacks and then just buying it. That's what causes wicks. But right now we have both passive sellers and buyers. So we have these guys that sold from this gamma wall, and then these guys. So I think there's a bit of a battle going on here. That's why I didn't exit this trade. I'm just seeing this as more of a range until proven otherwise, right? And a range means phase 3, it means distribution. So we're struggling below the gamma wall at the moment. Of course, everything can change in a blink of an eye. This is what happens. However, for now, we're kind of jammed in between the value that we opened inside of, so therefore responsive activity. And when I say responsive activity, I mean imbalance, market makers running the show, just pulling price up and down, up and down. But the fact that we are underneath the gamma wall is kind of invalidating my sustained auction, if that makes sense. Okay? Wow, equities are starting to look a bit weak. Interesting. Is DAX following that? Let me just have a little look-see at DAX. DAX did extend the initial balance, but it's doing it via double prints. So not the strongest. Maybe if we get up to VWAP on DAX, which is 24,020. Also where some calls are located. Maybe that could be a short. I'm just gonna give myself a little note to remind myself. Okay. It's fine. But yeah, so that's my idea behind confidence. When you have wicks, it's okay to, for example, have a wick and then a sell-off. And then if I say confidence reversal, I want to see... Okay, so we have it sort of here. If I... So this would be a confident drop-based drop reversal. So look at the composition. This is what I'm looking at, this particular structure. So first and foremost, looking at how it reversed. In this case, it's reversing from VWAP. Confident reversal. So we hit the VWAP, little bit of a buying wick. I don't like that. But this next candle, almost no discernible buying wick. We have a pullback because we moved away from the reference area. That's fine. But then the very next continuation trade has a very nice drop. So to me, this is a confident drop. And I would have been in off the basis of this drop and a pullback, because this is a 3 inside down pattern. And then it just melted away from there. So, you know, it's not that you're not allowed pullbacks. It's just that I hate seeing wicky price action. And when that's clashing with my direction, I just wait it out and I see whether they actually break out of a range or not. So in case of crude oil, this is all just a mess right now. Not odd for, like, when I say a mess, it's not necessarily a bad thing. It's like it's a messy sustained auction attempt. Right now we're sitting at, like, we are above initial balance, but every time we try and get up there, somebody smashes down. Try and get up there, but at the same time, every time they try to go down, somebody buys it as well. So it's like, eh. But until we go above the gamma wall, sustained auction for now is no longer in the cards. So hopefully that makes more sense. Shet is asking, anyone knows where to get the gamma wall and all of that good stuff? Mentor Q. Mentor Q is the company. How are gamma walls calculated? So initially it's just open interest out of the existing options activity. I'm just watching why I'm dipping into the value here for the London. That might be a setup in about 8 minutes, but I would rather be on DAX though, because don't like trading YM at this time of day. I don't know. Let me just make this a little bit bigger actually, because I'm watching this. Yeah, so gamma walls with MentorQ and any service that offers similar, they score it by the open interest. So the bigger the interest, the lower the number of the GEX, if that makes sense. So you have the major points, right? You have the calls, you have the puts, you have HVL, where gamma can shift from negative to positive, positive to negative, all that good stuff. But then you also have these smaller GEX levels. So GEX 1 and 2 are typically where the next lot of people are interested in and sitting and waiting. But it's all open interest from the options. So there's nothing to, you know, there is a calculation obviously to see which one is bigger, smaller, whatever, but generally it's literally just taken from the options matrix. And instead of you looking at horribly complicated option matrices, there are services out there. They kind of dumb it down to just like one line on the chart. That's what I need. I need options to be dumbed down. I do trade options and I have traded them for a long time, but I'm not somebody who does like super sophisticated multi-leg options. You know, I don't do that. I will just either do like, you know, some option selling if I find something is in range and I can sort of grab the premiums. But otherwise, if I think there's a swing, I will actually express that in a perfectly normal limited risk long option. So to me, that's like super low risk. You pay the premium and it will either work or it won't. And to me, I'm very good at timing the options trades like that. If you're not good at timing, then the time decay is going to get you, and then you'll be sat in an option for days before the move actually comes. So timing to a different degree is very important in options. So yeah, I still use all of my levels, right? I still use supply and demand. I still use Fisher transform to time the points where we're about to drop. I still look at volume. I still look at, you know, the options activity on the day. And then I just use all of my expertise on intraday to go, this is going to go. Like this is going. And then I will typically start the option and then keep it maybe for about a couple of days, maybe 3 or 4 days max, and then close it. So not terribly complicated, but the part leading up to the actual option entry is complicated, but the actual option, I'm fairly simplistic when it comes to options. D, is that a real combine? Well, I bought it, so, you know, I can't get funded on it because I still have my live, so, you know, unless I blow out of a live, which again, you know, could happen. You never know. And it's a real combine, so I have been, like I said, I've been trying to replicate, because we don't have analytics in the live, and it's really messing with my head. So I wanted to have, like a lot of the trades that I do, wanted to have them in here as well to see, you know, how I'm doing. July was patchy for me, but I'm still kind of maintaining my, you know, usually I have 43% accuracy, that sometimes dips to 41, but I do have a positive risk reward, even though I've been a lot more scalpy recently. So I'm still maintaining a positive risk reward. And yeah, it's not like a couple of days. I've been running this since, like, you know, since July. So yeah, a bit patchy. And yeah, just slowly chipping away at it. But yeah, I'm kind of waiting for us to get DAX. And I just realized that London, me trading in August on my live, when my products are just not moving, and then trading outside of the time of day, it was actually messing with my process and with my head. Just being super straightforward and honest with you guys. Because, you know, I trade DAX. So I'm like, okay, well, 9:30 is when I trade DAX. And now I can't trade DAX. So I'm like, so what do? Oh, yeah, copper. And copper was very kind to me. Don't get me wrong. I absolutely love trading copper. But now it's died on me. So now it's like, we have a dead zone. And I'm just trying to trade something while I'm waiting for DAX and waiting for August to blow over so that copper can actually start moving for this time of the day. And there's just no need for me to create extra stress by putting a minor hole for London and then going into my prime time of day, which is like after 9 a.m. Central, and into the settlement for my energies products. Like, why would I want to do that to myself? And I made an executive decision that I'm going to remove risk for London and therefore run a combine that can show me exactly the point where London might be ready for trading, or we get DAX, one of the two. So we either get into September when things liven up, or we get the product that I actually trade for this time of day. So yeah. Right, we've got 3 minutes, guys. 3 minutes left of the session. Short Life Hack says, never flat, always rolling, bull call spread to condor to ratio spread. Yeah, so you do a lot more options trading. But, you know, you were a market maker. So I was only a market maker for a very short period of my time. Absolutely hated it and decided to go into more kind of speculative prop, if you can call that. You know, the cowboys. And yeah, so. And also, like, weirdly in London, like, the prop over here, like, they do options, but it's not that popular. Like, I only worked in one firm, which was kind of like an offshoot of First New York over here. And even they, like, we had a few guys doing options, but it wasn't, like, anything like major. Most of us did like outright futures trading. And then if you wanted to carry something over, you could swing trade, but if you carried something over, you needed to be in with like a third of the position size. You couldn't carry over the entire position size because of the margin requirements. And then there were swaps to be calculated. Like it was so. But I like that more than market making. Market making was like, they were like, yeah, okay, you need to fill 3,000 lots today. And I was like, what? Me, who traded like 1 to 5 trades per day. It was just so outside of my personality that I felt like fish out of water, and I never really gelled with that. So I couldn't do it. Okay, I couldn't. I did it probably for about 3 months, and then my eyes were like bloodshot. I wasn't sleeping. I was like super stressed, and I'm like, no, I don't want to be doing this for the next 30 years. So I moved on. How much room do you think gold has to the downside? I think a fair amount, actually. Interestingly enough, I was looking at doing an option trade yesterday because I noticed some things were starting to click, and then I forgot. And then this morning I was like, now I can't do one until the market opens, and it's already so far away from my prices. So I think I'm just going to let that go. So yeah. Sanders says 3,000 lost today. Click market button. You can't click a market button on just like, I wish it worked that way, right? You just click one button, execute 3,000 lots, you're done for the day. It ain't working that way. Okay, so you need to do multiple trades, multiple setups, well, not setups, because no, there are setups, but you're kind of doing a different sort of thing. You're trying to catch bid and ask and give people the best prices and whatever. But basically, it's you have to keep trading throughout the day to generate liquidity for everybody throughout the day. It's not like, oh, you just smash in one trade and then you're done. Or, maybe 5 or 10 or 15 or 20. No, you literally have to provide liquidity. You're the market maker. You have to provide liquidity for everybody else throughout the day. Otherwise, and you can see that in some parts of the day, let's say lunchtime, suddenly liquidity dries up. It's like, well, why? Because the market makers are off to lunch or somewhere, right? It's a very simple reason why you have the lunchbox trading and nothing much happens. It's because it's the lunchtime. People go and get a ham sandwich. We're not joking when we say that. Like, where are the market makers? Oh, they're eating and drinking coffees and maybe a cheeky beer by for lunchtime. That's what we used to do. My target and goal is 33.98. Mateus Bueno says, 3,400 has been a pretty decent level. But if this thing is... So let's have a look at gold for a second, because this crude oil is just sitting underneath the gamma wall. I don't think it's going to move until much later, so I'm just going to keep that going. What am I doing? No, wrong button, D, wrong button. So look at gold. So gold on the weekly chart is in a one massive distribution. If this breaks and starts rolling over, it's going to get ugly. Especially if like Russia and USA come to some sort of a Ukraine deal. Just be on the lookout for shorts on gold. Depending on what will be the focus. So yesterday we had some numbers, were they PMI numbers? So they came out a little bit shaky. So it's like, is it a recession? What's going on? And, now everybody's going to be looking for GDP numbers to see whether... those are doing pretty well over the 2 quarters. If they're not, we might be in a bit of a trouble, in which case we could see gold carry on higher. But I think the focus in the near term is this, like, what's going to happen with Russia and Ukraine. But if they come to some sort of ceasefire, I'm expecting a pretty massive move as both a technical move, but supported by some fundamentals. So if that happens, the distribution turns into liquidation. I call them phase 3, phase 4, because I'm always kind of confusing accumulate. Even when I was doing the recording for my pro development program, the Market Stalkers method, I kept confusing distribution, accumulation. Now, obviously, I'm Somebody who likes to prepare very well. For these things, I don't really have a script, so that's why I'm a lot more random. You can kind of see how my brain works. But generally, when I'm doing lectures, I'm very focused. Not for VIPs, like I just have like the PowerPoint because I know what I talk about, what I want to talk about. But when I'm doing structured courses that are CPD certified and they have a certain level of flow to them and a clear-cut goal for every single bite-sized piece of the lecture, in that case, you want to have a script. So I did a script and I'm like seeing distribution and D is reading accumulation. And I was like, this is like ultra annoying and like, how can I make this simpler? So I thought to myself, is everybody else having this problem or is it just me? Do you go reaccumulation, redistribute? And then I thought to myself, I'm just going to call that phase 1, phase 3, phase 2, and phase 4. So that's liquidation, distribution, and then markup, liquidation, right? So accumulation is when something falls, then settles in, then turns around. This is basic Wyckoff, by the way, and then goes into a markup, goes up, distributes, stays in a range for a while, then liquidates. That's phase 4, right? Sometimes you can have reaccumulation where we go up, looks like a distribution, but then it breaks out into yet another leg up. That's reaccumulation. But D could never, ever remember that. So D decided to rename certain things purely because she was too unbothered to properly learn. But yeah, I know what they are. It's just that, I don't know, under a little bit of pressure, my brain seems to break down. That's just how it is. Granny D over here. But yeah, if we start to roll over on crude oil, on gold, it might get a little ugly if we get some positive news in regards to the ceasefire between Russia and Ukraine. We'll see. All right, I think that's it. Again, another dull day of trying to see if London is actually going to move anything anywhere, and kind of moved gold. Crude oil still sitting right at that gamma wall. So yeah, let's see what the day brings. I'm going to kill that trade and wait for some better situation to come along, and to focus on the live account, discipline, risk management, and all that good stuff. Hopefully we will get those disclaimers for those of you who are in my VIP. Hopefully we'll get the disclaimer that we're waiting for from the compliance and legal. That's the only thing preventing us, because we cannot run any lectures that might be posted somewhere online without compliance giving us the disclaimer. So that's kind of what we're waiting for. But also it's a good thing because we're trying to set everybody up for success in this season. So yeah, hopefully we'll get that. I will jump into the Topstep VIP Discord in about a couple of hours' time, and then we can start discussing pre-market and the open and all of that. And in the meantime, I will see you a little bit later. I think tomorrow I have Paul H is coming on, so we're going to have Paul H as a guest. And then later on I will have Lunchbox Trading, so we're going to catch up on the VIP. And yeah, exciting August. Not so much for price action, and even though equity seem to be a little bit more exciting than my products. Yeah, let's try and survive the August month, right? So August can be a little bit weird and quiet. Might have a hangover day after the big move yesterday in equities as well. So keep in mind that post massive days outside of any kind of catalyst, you do get stuck in a range. Just probabilistically, it's just how it goes. Sometimes it can, completely roll over or whatever, but for the most part, it tends to be a little bit quiet. So the bigger the day, the more likelihood of a hangover day. So yeah, that's it for me. I will see you tomorrow. This was the Euro Trade with myself, Mark Stoker D, on TopstepTV. See you tomorrow. Take care.